Welcome to another edition of the Economy and Politics Show, where we discuss developments in the economy as it affects the populace and even, of course, the households. It's very important that we look at how economic activities impact the country. And today, we'll be looking at a very interesting part of this conversation, the subnationals. So we'll be discussing around the second half of the year 2021, what's the economic outlook for states in Nigeria? And we need to have this conversation is Dr. Ayo Teriba, the CEO of Economic Associates, an economist in Nigeria, has been involved in several decades of policy planning and strategy for federal and some subnationals. Thank you, and nice to have you on the show, Doctor.
Thank you very much. It's my pleasure to be here.
Yes. First, let me begin with the fact that it's clear knowledge that revenue headwinds has been there in the economy, particularly with what happened last year, the impact of COVID-19 and hitting key sectors that were source of revenues to states. When we look at last year in terms of internally generated revenue, it was about 1.31 trillion naira, which was a bit lower than 2019, which was 1.33 trillion naira. And the trends showed here was that the federal accounts allocation accounted for 64% of the aggregate total revenue of the 36 states in 2020, which means a lot of work has to be done in the IGR. Full year 2020 contributors were Lagos with 32.1% of the contributions to IGR, Rivers 9.0%, and the third was the Federal Capital Territory, while states like Yobe were the least in terms of contributions. But in terms of navigating these revenue headwinds, it's very clear that there needs to be clear steps by state governments to begin to look inwards and find ways of boosting their IGR in a level that it meets at par with the FAC allocation. It's only Lagos State that had 419 billion naira in terms of IGR compared to the FAC of 116 billion naira. What would you be saying to these issues considering the challenges of last year, Dr. Teriba, the need for states to navigate revenue headwinds to carry out their fiscal activities?
The fact that the pandemic and the economic ripples from the pandemic eroded government revenue, not just at the state level, at the level of the federation, federal, state, and local governments. More or less all states revised their budgets downward in the face of the lockdown last year. And I had checked the budgets that they announced for 2021. There's no state that recorded an increase in budget from 2020 to 2021. If you compare the budgets originally appropriated in 2020 before the lockdown forced them to revise it down, and you consider the budgets they have now appropriated for 2021, all states have contracting budgets, which is the opposite of what is required. If you compare budgets in 2020 with budgets in 2021, in an environment of close to 20% rate of inflation, you would be expecting that each state the budget of each state should be 20% higher than the original budget of 2020 if they were to stay at the same place. Unfortunately, no state has a budget that is even 1% higher than 2020 budget. You have states that are maybe 20% lower. The 2021 budget is 20% lower than their 2020 budget. So we have just looked at inflation. If you look at exchange rate because their budgets are Naira budgets. And the private market exchange rate as of 2020 was 360 Naira to the dollar. And today, let's even say it's 480. That's 1/3 of the value of the budget has been wiped out by devaluation. So you need a budget that is, bigger for you to say that they're standing at the same place.
Yeah.
So you have lower budgets that have been further blighted by inflation and devaluation. You may say they amount to double counting, but the point is that most states are probably having to spend in 2021, in real terms, maybe 50% of what they plan to spend in 2020. That depicts the seriousness of the situation. And in 2020, when you were budgeting, when you were announcing the budget, it was not foreseeable that a pandemic is going to kill 2,000 Nigerians across the states, that a pandemic is going to make, thousands of Nigerians ill, that the pandemic is going to prevent millions of Nigerians from going to work, from traveling, from moving around, that the pandemic is going to push millions of Nigerians out of employment, seize their livelihoods from them. So in the face of the pandemic, you needed to spend more than the pre-pandemic, both as palliatives and for reconstructive purposes, to rebuild the sectors that the pandemic had ruined. For example, the education sector. Schools couldn't open maybe for 6 months. The hotels and the restaurants, they couldn't open. So government needs more money to spend to support companies and individuals in the wake of the pandemic and in the aftermath of the pandemic. And the reality is that whether you are talking of central allocation of internally generated revenue, in real terms, they probably have half of what they were used to, when they need double of what they were used to.
Yeah.
So that's setting the stage. So the times are tough for states. The global crucible bites states extra hard. They don't have the access to credit markets that the federal government has. They cannot issue treasury bills, for example. They cannot easily issue bonds. And they can't do ways and means. So, faced with the same situation, the federal government has a credit buffer. The states have none. However, when the going gets tough,
the tough gets going.
The tough gets going. We work very closely with some states. And I have described that situation to leave you in no doubt that I know how dire the situation is. But like every other challenge that the global crucible presents, you can soar over it. You can turn the challenge to an opportunity. You can turn the opportunity to a strategic success story. So our advice to the states in the face of not just that their revenue is low, that the economy has been in a recession, is now out of a recession, is still growing. If you go by the first quarter 2021, it's growing by 0.5 percentage point, 0.51%, when the population of the average state is growing by 3%. So in per capita terms, our economy is still declining. It's not wise for anybody to now start advising the states to look for more taxes when you know that the economy is in recession, when you know that people's income has either been taken away by unemployment or has been decimated by devaluation, by recession, or by inflation. When you know that company profits had been buffeted by these same factors, and you say you are government, you want to increase tax revenue, it's not the wise thing to be thinking, to be saying, or to be trying to do. At this time, sensible governments around the world are giving tax breaks, are giving tax moratoriums, and they are subsidizing income, those people who have been displaced out of jobs. They are, American government is pushing trillions of dollars into the American economy. The last one was 1.9 trillion. For you to know how heavy that is, the American economy is not 19 trillion. So for you to inject 1.9 trillion, that's more than 10% of GDP. You one check. And that was the thought that they will do. If not the fourth, and another one is being debated. And it's not just them. That's what the typical sensible government has done. So this is not the time to tax. This is the time to subsidize. And they are subsidizing sensibly. They are doing income subsidy. Not price subsidy. You don't know who is going to benefit from price subsidy.
Okay.
It won't be the people you target. So they're not subsidizing petrol products. They're not subsidizing power. They are giving checks to the vulnerable so they can buy petroleum products at any price and buy power at any price. So the state has no money. The state cannot raise tax money. The state must give people money, because however dire the impact of the pandemic is, it is by definition a false alarm. It is temporary. Once the pandemic goes, the problem stops. The mistake that a government can make. So the sense in subsidizing people in the face of the pandemic is that the pandemic is a temporary problem. If you make the mistake of not subsidizing the populace in the face of a temporary problem, you run the risk of turning that temporary impact into a permanent one. If you don't, give people the income to keep their lives going while the pandemic lasts, or in the immediate aftermath of the pandemic, then you risk long-term unemployment. You risk people being, displaced from their homes. So it's important that you find the resources to keep companies and people going now. Because the hope of your economy moving forward is that they are not displaced.
We'll leave it there. We'll leave it, Doctor. Doctor. We want to go on a break, but very clear what you said. Tax it's not a time for tax. It's time to subsidize income. And when we return from that break, we'll continue this
we will now
conversation.
Look for what is it? Where should we be looking for resources?
Yes. So we'll take a breather now, and when we return, we'll continue this interesting conversation.
Starting and growing a business is not an easy feat, so you need all the support you can get. What if the right support were just a few clicks away? It actually is. Say hello to FCMB Business Zone. FCMB Business Zone is a one-stop online platform that gives you access to a wide range of business resources, including certified online learning, advisory services, escrow services, and so much more. What's more, you can make your business offerings visible to more customers by signing up as a merchant on FCMB Business Zone. You can also join any of our over 20 communities of interest and effectively grow your business network. To get started on the Business Zone, please visit businesszone.fcmb.com. Sign up on FCMB Business Zone today and get access to new opportunities to network, learn, and grow your business.
FCMB, my bank and I.
Welcome back. If you're joining us, it's the interesting conversation around second half of the year 2021 and the outlook for states in Nigeria. And with me discussing this is Dr. Ayo Teriba, the CEO of Economic Associates. So Dr. Teriba, let's look at the issues of driving investments, because yes, states are supposed to at this period subsidize income, but they need resources. They need, like you said, tough times for revenue and all that. And Lagos State is planning to roll out its deal book, where it creates the enabler for states, for investors, for people who want to invest in the state and carry out business opportunities, to look at key sectors they can invest in. This is a very interesting development. And what would you be advising states? Lagos has brought out their own strategy in terms of attracting critical investments that can boost revenue and even give states resources to carry out what you're saying, subsidize income and also various other fiscal responsibilities.
Our advice to states on how to find resources in the face of the difficulties presented by, the global crucible is around four pillars. And the first pillar is possession-based strategies. Many states look forward to what government is going to allocate to them, largely from oil revenue. And the weakness in the price of oil has made that disappointing. And the key question is, before you start looking for what's going to come from the center, what do you possess that you can leverage upon to raise revenue? And there is no state that does not possess a lot. So you can look at this possession-based strategy as, okay, asset-based strategy. Basically, it's a question of what do you own? And the various types of assets that states own that they can unlock, resources from are one, they own companies. That's their own corporate assets. They own lands and buildings. They own some intangible assets, like patents, like rights, that they can license and people will pay valuable money for. And they own human capital. They own human assets that they can transform to human capital and asset from. Briefly, I would like, all states own one company or the other. But I'm not sure that you have any state that knows the value of the company that they own. So the first step is, okay, if you know what you own, what is the market value of what you own? So you need to list your companies in markets at home and abroad to establish their value. And in the approach to the market, it gives those companies an incentive to enhance their own value so that their market valuations will be favorable. So corporate assets that are not listed, that doesn't have market prices, are non-financial assets. corporate assets that are listed, that have market values, are financial assets. The more of your corporate assets that are financial assets, the easier you can raise revenue, you can unlock liquidity with those financial assets because you can securitize them. For once, once you list them on the stock exchange, it's your choice whether you want to sell equity, you want people, to sell shares. And if you don't want to sell shares, you can issue debts that are securitized by the shares. So you still own the company 100%, but you have easier access to liquidity, as you can securitize those shares if the market values are known. You can't securitize any of your company that has no market value. So it weakens your financial situation when you have a company whose value is not known. So that's one easy step. Just list, like Saudi Arabia listed Aramco, and the market confirmed Aramco to be worth $2 trillion. Saudi's access to credit markets is 200 times easier after they listed Aramco than before they listed Aramco. They have not sold the company. Second, your lands and buildings. How much are they worth? In India, United States, China do periodic auctions of lands to establish their valuation. So they financialize not just their companies, they financialize their real estate as well. The United States treated the real estate, government real estate portfolio the way we treated our pension sector. The licensed auctioneers and valuers, the licensed developers, and the licensed facility managers. So constantly auctions are going on, and spaces are being redeveloped, redevelopment rights are being sold, and facilities are being managed. And the government of America is unlocking resources quietly. Same as UK government did to prisons, relocated inner city prisons and released them for commercial premises, whether offices or business. So states, you have land, you have companies.
Have intangible assets.
Do you know their value? Value them and begin to unlock resources from them. I'll put it. The next strategies, place-based strategies. Apart from place-based.
Okay.
So you have possession-based, you have place-based, you have product-based, you have people-based. So place-based strategy says that, hey, look, you states, there's no state that doesn't have a few cities that belong to it. And all cities have city centers.
Yeah.
Or central business districts, or inner cities, what you call this urban slums. When you go to Idumota, you have the place where markets is being done, business is being done. But then you also have those buildings, 2-century-old buildings, that are now slums. Ikeja, the same, everywhere. Oshodi, everywhere. Now, why would you have city centers and inner cities and you are poor? If you go to other countries, government make a fortune from their city centers. First, most countries, if you travel around the world, the thing you notice is that if you go this year, in 5 years' time, you go again, there is constant redevelopment of their city centers. Constant urban renewal is going on. And where that is now is you can't even drive into the city center. They've cut it off from vehicle access. This one that all cities that you go to in Nigeria, pedestrians will be struggling with the motorists. At the city centers, at Oyinbo, at Oshodi, at Dumota, at CMS, It's a mess. What they do is they clean up that mess. You can't drive in. They build parking. You make money from the parking spaces. You go there, it's like the airport. You park and you walk or you cycle, and they secure the space. So you find top-end shopping, top-end eateries, picnic centers, all of which give the populace opportunity to create value or consume value. And the state smiles home by capturing some of that value. So their city centers are amenitized. Our city centers are not just congested and dirty, they're not safe. We didn't secure them. Hoodlums have hijacked them. You are no safer at my 2 or Igbo or Eco Bridge in the afternoon than you are in the forest. Hoodlums have seized the place. And what does it cost you? You to turn most of these cities.
To amenitize them and secure them.
Correct. So our city centers are value-destroying centers. And doesn't cost you much to secure them and amenitize them, to turn them to value-creating centers.
Very interesting insights, Doctor. If you can,
that's the second one.
If you can give us the third and fourth, so we can just mention the third and fourth as we go another break, and then when we return, we ramp up the conversation. The third and fourth pillars, you were saying.
The third is product-based strategy.
Product-based, okay.
If you line up all the 36 states, you won't have any product that all the states produce equally. Whether you're talking of agricultural products, or you're talking of industrial products or manufacturing, or you're talking of services. So each state should tell us the products that they have advantage in and demonstrate to us what the state government is doing to ensure that that product thrives. Identify the value chain and show us those stages of the value chain where if the state does not step in, nobody is going to represent those stages. That's the third one. The final one, people-based strategy. Nigeria has a youth bulge. Maybe 2/3 of our population, every state, are youth. That's energy, potentially income generating. How many states have a human capital development plan for their youth? The way the Philippines train mates and support them to penetrate the diaspora, they earn income for themselves, they send remittances back to the country. They train sailors. They train doctors, nurses. Indians are present in our midst here, running chain stores. They're all over the world. Chinese run Chinese restaurants all over the world. They run Chinatown all over the world. What is any state doing to enhance the skills or the return to the skills of its populace? Because it ends up, the more skills your populace eats, the more you earn from pay. Is that not?
Definitely.
Okay, so those are the 4 strategies that we're encouraging the states. So we find that the states are broke, not because they should be broke, but because they have neglected the assets that they're endowed with in the question of just looking and we're expecting money from the center.
We'll leave it at that and we'll go again on a breather. And when we return, we'll wrap up this conversation on the outlook for the second half of the year 2021 for states.
Starting and growing a business is not an easy feat, so you need all the support you can get. What if the right support were just a few clicks away? It actually is. Say hello to FCMB Business Zone. FCMB Business Zone is a one-stop online platform that gives you access to a wide range of business resources, including certified online learning, advisory services, ESCO services, and so much more. What's more, you can make your business offerings visible to more customers by signing up as a merchant on FCMB Business Zone. You can also join any of our over 20 communities of interest and effectively grow your business network. To get started on the Business Zone, please visit businesszone.fcmb.com. Sign up on FCMB Business Zone today and get access to new opportunities to network, learn, and grow your business.
CMB, my bank and I.
Welcome back. And Doctor, you've really given a very clear insight. I think for me, the big takeaway is that states that do not take cognizance of the resources and assets they have do have challenges with liquidity. And that's something that every state government should be taking seriously. But in the next 45 seconds, can you tell us top 3 things that states should do, or what you see as the outlook for the second half of the year?
As long as it relates to possession-based strategies, the ball is entirely in the court of the states. You own a company, you own land, you own buildings, establish their market values. You don't have to sell them. Once you know their market values, you can securitize them. So you can eat your cake and have them. But the other 3 strategies transcend the state. Whether you're talking of place-based strategy, hoodlums and polluters are happy to seize your city centers and your inner cities and pollute the space with noise, with dirt, with waste, and with crime, because they benefit from those activities. The society loses from the activity. The private rate of return is higher than the social rate of return. So it's up to the state to step in and curtail those negative activities and maximize the social rate of return. The same with products. There are products that nobody is going to invest in. It could be agriculture, it could be manufacturing, it could be, services, because the investor will not be able to recoup his investment in the presence of externalities. The society gains more from his investment than it could recover. So it's up to the state to step in and create incentives for those investments to happen, so that the societal value is maximized and the investor is protected to get something commensurate with his investment. That's in products. And in human capital, in people-based strategy, some level of education, the lowest level of education benefits the individual. But beyond basic education, there's more benefit to the society than to the individual. So individuals are not likely to invest enough in acquiring skills and higher education. So it's up to the state to step in and ensure that those skills are acquired. Because for one PhD holder that you have, you can produce a lot more. For one skilled person that you have, you can produce a lot more. That's not to his benefit, that's to society's benefit. So it's up to the state to step in and equalize, and correct, the distortions in private and social rates of return in the last 3 stages. So it's up to states, to step into this, however severe, the pressure out there are from the world economy, from the national economy. Every state can be rich, every state can prosper, every local government can have event centers, and hold the things that private companies are doing. You should have every local government that has a hall where you can go and hold events, hold reception, and the rest of that, and make money. And the places are secured. So for those who are strategy minded, Economy Associates is, doing a lot in this space. We'll talk about it in our conference, and we are already engaging some states, progress-minded states, who wish, to unlock the resources. There is no state that is not viable. There are only states that are not, strategically unlocking the value in their states. Thank you.
Thank you very much, Dr. Ayo Teriba. It's very clear. States must strategically position themselves to unlock value from their assets. And that'll be all for this edition of the Economy and Politics Show. We had Dr. Ayo Teriba, CEO Economy Associates, an economist, giving us insights into the outlook for second half of the year 2021 as it has to do with the economy of states. You can join our website, www.proshenji.com, and click on the right hand of the bar, the Nigerian economy, to get all the updates on developments in the economy. And of course, for subnationals, scroll again to that right hand bar and check on states and local governments to see the developments around revenue and policies. Also, we implore you to send your views and comments or questions out of this conversation to otuabasi.abasekong@proshenji.com. It's already displayed on your screen. Also, follow us on our social media platforms that are showing on the screen. Don't forget this period that you need to stay safe. Thank you for being part of this show, and have a nice day.